That's it.
Hello, everyone. Welcome to our Tuesday Q&A with Lynette Zang, our Chief Market Analyst.
Woo!
I'm Eric Griffin, President of ITM Trading. For those of you who don't know or are tuning in for the first time, we ask questions from you guys. Get them from, the best place to get them to us now is questions@itmtrading.com. Email us there. And then I put them on a one sheet, ask them to her live, so you get a real true organic response. She's not seen any of these questions today. So Shelly S. asks, if one was worried about losing money that is invested in stocks in a 401k, is there something that can be invested in inside of the 401k that is a good option? Good option. Mining stocks.
Well, first of all,
Deutsche Bank.
Oh yeah, Deutsche would be perfect, but right. Unfortunately, all of that, you could have some different options, and there are. Here's the hesitancy. Okay, if you're inside and you're not holding it in your hands, if you don't hold it, you don't own it, and it doesn't really matter what it is. It's just your perception of ownership. So there are maybe a little better options than other options, but mostly they're going to be, it could be something like a short-term government money market fund without the fees and gates, supposedly.
Meaning,
now,
so like if you needed to be able to get out quick, you could.
Right.
Okay.
In theory. We'll be testing it, I'm sure. But at least in theory, then you could, except what are you getting out into is another program. You really cannot take a physical distribution from a 401k that easily or that quickly, and it may or may not be allowed. I mean, there are several options. So personally, I think the best way to deal with money that you hold in a 401k is to protect it outside of the 401k. That's a lot of the part of the strategy is what are you going to hold on to and what do you need to protect it so that if you lose all access to it or it goes away or, you lose all access to it.
So you take the risk inside of your 401k and invest in whatever you think is appropriate, but then protect it with physical gold and silver outside of it.
Exactly.
But but
even mining stocks, mining stocks are still stock, okay? They're not the physical metal.
Right, and I think that we all know, like, if there's a reset, it's all going to be subject, but if there was just some kind of a mild crisis or crash or something in the market, and it meaning like it's not a full system reset,
right.
then like maybe mining stocks would be a good option because they'll probably be around and there will also be demand for those, right? Didn't we see? Didn't mining stocks do well in the last crash? I didn't look because I wasn't.
Well, they did. Actually, you know what? I can pull that up, and we'll post this because I have a comparison graph between the spot market, the mining stocks, and the numismatic, the collectible coins. So I did a little 3 things so you can actually see that. I don't think they did go up because, remember, the government, the central banks do not want you to hold gold in any form. They just want you away from it. Okay? So you have to realize that to begin with. So when we saw spot got hammered, and I'm thinking back, I would say that I'm 98.7% sure, maybe even 99.7% sure that the mining stocks also dropped at the same time that the spot market
But then
dropped.
they boomed after, right?
Then they did go up. Boom.
It seemed like they took a hit when the bullion took a hit, but then like in early 2009 they started to trend up.
Well, yes, and as did spot, right?
Yeah, totally did.
So the answer to that is yes. But again, you're talking about paper. You're talking about fiat. So you're talking about a limited market, and you're also talking about an intangible. And in a reset or even in a major crash, Okay, if it's inside the system, the banks are zombie banks. I love it because I'm listening today and they're touting about, this is the week that Lehman went out and now the banks are so much safer and this and that, and it's I show you all the time it's not true.
Mm-hmm.
That's according to their documents. Just because they've changed how they formulate something doesn't mean that the risk and the danger has left it.
Totally.
Right? So we're talking about zombie banks. Well, who's holding all of the 401k wealth? Right? So if they're zombie banks and they're insolvent, and we go into this next crisis, that wealth that's in there isn't really there because they've leveraged it.
Right, on derivatives.
Exactly.
Okay, so
Exactly.
Tony C says, or asks, once the reset occurs, which I believe will be when the powerful financial elite are ready for it,
I agree.
do you think that these same powerful financial elite will continue to have the sufficient power to steer the value of the precious metals in the direction they want, rather than let the price be determined by the market?
Yes. And, we've got great examples of that. And it will happen when either those powerful elite are ready for it to happen, and that's why they're trying to transition it, or they lose control. Now, how can they lose control? John Q. Public. That's how they can lose control.
Too much demand for the physical, which then kind of breaks the system.
Well, no, I'm talking about, actually, I'm going to be talking about it tomorrow. I'm talking about the confidence in the system. I was talking to one of the brokers earlier today, one of the precious metals consultants earlier today, and he said, I was thinking about what you said, which is that these dollars, this fiat money, only has value because we give it value. Well, exactly. So anything that's fiat, dollars, euros, yen, it doesn't matter, or these Wall Street products, because that's all they are. So they get you to take on debt, and then they turn that debt into a product that they turn around and sell you. This is all done on leverage, by leveraging up the entire system. But it only has demand in one place. One. So when that demand goes away, you have no buyers. But if you're looking at the physical metals market, gold and silver, there's demand across every single area of the economy. So in the financial area, in the medical area, in manufacturing, in art, in jewelry, every single area of the economy, there is a level of demand, constant demand, for both gold and both silver. So it gives you the broadest base of buyer. This is critical, and it's a critical concept that I wish people would really understand. So I absolutely agree with you, but understand that that's how they perform the reset. So even as they are controlling the spot price, thank you, the spot price of gold and silver, they know its true value. That's why they're accumulating it. And they will reset the fiat against that. Now, afterwards, like we're seeing also in Venezuela, continues to go up, because then the market also kicks into gear and recognizes that the fiat is going away. But prior to the official reset, the market definitely had, as I showed last week, it had a much different value for an ounce of gold on the market than the official price.
So that's funny, because Linny asks, I put this question as a follow-up, when the reset happens, who will be the governing body to determine the value of gold and silver? But you're almost saying the market is going to be the determining factor.
Ultimately, initially, it depends on how much paper that they need to cover. Okay?
That determines the value.
Right.
Got it. Okay.
And
I've heard you say that before, because it's the debt versus the ounces piece.
Exactly. And nobody really knows what that cover ratio is going to be. 10%, 50%, 100%. I don't really think it's going to be that high. I would think it, maybe
Just an
it'll have
element.
to be enough to gain confidence. So that goes back to what I was talking about before with the public, right? Because everybody on Wall Street and all the governments and all the central banks have agreed to play this game. And we have been taught a lie. When a well-packaged web of lies has been sold gradually to the masses over generations, the truth seems outrageous and the speaker a raving lunatic. One of my clients sent me that a long time ago.
That quote.
Yeah. It's like, yeah. And that's really what's happening, right now. So it only works because we already know interbank lending, the banks do not trust each other anymore. The central banks do not trust each other anymore. We had the Swiss surprise and we had the Chinese surprise. So where's the trust and the confidence coming from? Well, whoop-de-doo, we're at some of the highest levels of confidence, consumer confidence.
Perception management.
Exactly.
So this question actually parlays right into that one, I think, with
wow.
Herb M.
Okay.
Says in a future video, I'm jumping ahead to a question because I think the SDR plays into exactly what you just talked about.
Yeah.
In a future video, could you explain to us what the role of the SDR will play as we head into this financial crisis? Because you talked about the elements of gold backing a currency, and I know you've talked about that with the SDR before.
Well, absolutely. And that's because the IMF acknowledges, originally it was based on the weight of gold. And they absolutely acknowledge that gold may have to become part of that basket of currencies. And the role of the SDR, look, I can't guarantee this, but I've sure been watching it for so many years and watched the evolution of the IMF. And that's where all the power sits, the IMF and the BIS. But the IMF, sorry if I'm repeating this, but it's important to understand that all of its members are every Treasury Secretary, almost every Treasury Secretary and every central bank chief in the whole world. So to think that they would be sitting down and breaking bread together and having all of these conversations about how they're going to steer the economy, and then all of a sudden there's a division from here to over here, when they were just recently, we were talking about a synchronized global economy. I have a little challenge with that. Okay, it's hard for me to say, oh yeah, well that's them and this is us, because it's all together. It's all together, and we need to acknowledge that. But the IMF created the SDR to take over as the world reserve currency back in '69. That's when it was created, and that's what its function was. So they had put all of those mechanisms in place. They brought this out of mothballs in 2009. The SDR never really went away, but it was kind of slumbering. In 2009, they tested all of their mechanisms, including the substitution fund that enables governments or entities that are holding US dollar denominated assets. That could be one way out of the, I just thought of this. There are so many emerging markets that have taken on a lot of debt in US dollars, and they really can't repay them because now the dollar relatively is stronger against their currency. So there's a lot of default happening. But the substitution fund was actually created so that if you were holding US dollar denominated products, you would deposit it into the substitution fund, and then the IMF would convert it into an SDR denominated product. Mm-hmm. Okay, so yeah, that would be one way to, and China's sitting on a ton of dollar denominated debt. So in this next go
wash
around,
away with SDRs.
Yeah, could convert
be
them.
the easy way to transition from US dollar denominated world reserve currency to the SDR.
Yep. And look at it, creates immediate and absolute demand for SDRs.
For sure.
Then
and zero demand for dollars.
Exactly. So
voila,
we have
hyperinflation.
Voila, exactly. And global.
Mm-hmm.
Global. Because the SDR is a basket of a variety of currencies, and they intend to expand that basket. So now you just have a whole bunch of fiat, and the IMF does not have to take on debt in order to create that. That is a currency that is truly created out of thin air and is not a claim against anything. And do not forget AC coin, which turns into an SDR when married to Bitcoin or Ethereum, and is specifically designed to hold title to tangible wealth, which was one of the stated goals of the IMF, was to have all assets globally be valued in terms of SDRs, which right now they're valued in terms of dollars, although that's been shifting. So yeah, yes, yeah, the SDR is a really important piece.
Yeah. Okay, so M. Zook asks, what do you mean by bullion? What do you mean by collectibles? What do you mean by monetary gold?
Okay. Well, bullion is basically just about weight. And so is actually monetary gold.
Right.
That's,
bullion and monetary gold, you use those kind of interchangeably.
I
One
do.
and the same, right?
Yeah,
Okay.
I do. So that's just about weight, and that's new stuff.
And bullion can be coins or bars. A lot of times people think, oh, bullion, and they're thinking of the bars. But it can be coins or bars, usually modern minted stuff. Basically, gold eagles, Canadian maple leaves, and whether that's silver or gold. Right.
And one of the precious metals consultants, when we were talking this morning, he brought up a really good point. So I'm going to bring that out here. So that's probably why we had that conversation. With bullion or monetary gold, you have a base of buyer that's just looking for the weight. The collectible gold has a different classification via the IRS, right? So it's not me that says, or Franklin Mint, frankly, that says, this is a collectible. It is the IRS that makes that difference. If you want to know what it is, if you can't hold it in an IRA, it's classified as collectible, just really simply put. Well, that goes into a different category. And when I look at what the smartest guys in the room are doing for themselves, so what are the 1%ers, those guys that can either write the laws or have the ability to influence those that write the laws, history shows us that when there's a law in place that benefits them and not the masses, that law doesn't change or it gets reinforced. So that's the category I want to be in.
Right, and to clarify it, it's kind of more for your world, it's what you're saying, to be more clear, it's almost like a little nuance.
Correct.
Not necessarily, because I don't want people to say, oh, well, because they're going to think that, oh, well, then this means this coin's a collectible. That doesn't necessarily mean that. She's using it as a nuance in terms of thinking about confiscation.
Right.
When it comes to an overt confiscation, there's that nuance of, well, what does the IRS classify as?
Thank you.
Monetary gold, usable in an IRA. She uses that as a little nuance to make decisions off of.
Right. Because I want the kind of gold that whether I'm right or whether I'm wrong, whether they confiscate or they don't confiscate. I mean, that's certainly beyond my control, but I want to be prepared with real money to take advantage of the opportunities that always present inside of a crisis. So I want the kind that I absolutely believe I have the best chance of holding on to and being able to use.
All right, so there's a couple, we'll take a couple live questions.
Okay.
Steven 1000, does it matter if the national debt is more than the GDP? After all, an individual gets into debt many times their annual income with a mortgage, etc.
Well, historically, according to the central bankers, yes, it does. It means that, just as an individual that gets over indebted, if you don't have any savings and you run into trouble, where are you going to pull that from? The difference is with the government is that they can do QE. They can take on more debt until they can't. And that's true for the individuals as well. They can do it until they can't. We are now at a point inside of this life cycle where we know there's a crisis that's brewing, and we know that it could hit any time. But what we also know is that the central banks and the corporations and the individuals did not use this opportunity to lower their debt and create savings. What they did was they loaded up a lot more debt. So it's very much like a house of cards. They can do it and tell you they can't. You're absolutely right. But right now what we're seeing is, aside from stock buybacks supporting the stock market, the rest of the markets, they're counting on the public to support those markets. So I don't know, how much debt can you take on before you can no longer service your debt? And the incomes to service that debt are definitely not growing fast enough, whether they're government or corporate. Well, corporate profits are exploding, forget that one. But whether they're individuals or they're governments, they are not generating enough new money. That's why we've got all the deficits. So it comes to a point where somebody's not going to sell you something because they don't trust you anymore to come up with that money. So yeah, history has shown us that yes, it definitely does matter. And everybody, unfortunately, we're all pretty much there right now.
So I was checking the questions. I like this one. E. Sterno asks, if gold and silver is undervalued, why is there enough on the market to buy?
Well, that's exactly why.
Mm-hmm.
That's, and remember too, that with the advent of the paper market and the derivative market, that creates a whole lot even more. So what people don't realize in the physical world, I mean, chances are, for enough of whatever the currency is, until the currency, all confidence is lost in the currency, you're still going to be able to accumulate the gold and the silver. That's what the central banks are doing. I mean, we've noticed for years how demand has not matched the price action. Mm-hmm. Take advantage of it. That's what central bankers are doing.
Right, and as the value goes down,
some dollar people, value,
right?
Okay.
In terms of dollars, as the price goes down, a lot of smart buyers come in and they buy up the market, and then demand gets hot, and the supply gets real tight in the physical. But it also, a lot of people don't think. They think, oh, I don't want to catch the falling knife. Silver's and gold are going to continue to go down. I don't want to buy, right? So it's kind of it's both sides of the coin. But for example, like right now, we're really backed up on like generic silver rounds, dimes and quarters, because the price has fallen. There's been a lot of demand for those products that can't be minted anymore, and so there's a back order date that's pushed way out as the price has been pushed down.
Right. But on the other side of that today, I know today we had some really nice 64 lids. Right? So guess what I bought today?
Yep.
Some really nice 64 libs. Really, really, really cheap. Cheapest house in the best neighborhood. Silver it's backlogged and it's cheap. And remember this.
It is.
Yeah, and remember this, that regardless of what happens with the spot market, the more debt they grow, the more fiat money and products that they create. Exactly. So I do not give a crap. The only reason why I care about the spot market is because you care about it. I personally do not care about it. I just accumulate. And I don't care when it was at $1,900 it was undervalued. At $11.95 it's undervalued. $14 for an ounce. Are you flipping it? All day long I will buy it. As long as I can, I will take that worthless fiat and convert it into food, water, energy, security, barterability, and wealth preservation so that I can help the community. All day long.
All right, so you want to give them some updates of this week?
Absolutely. So we've got Dustin Nemos 2 on his YouTube channel this week, right? And if you stay in tune with social media, she'll let you know when. And also on Thursday, I'll be with Sean at SGT Report.
Not this week, though. It says 9:20.
Oh, next week,
So
9:20. Oops, Sorry about that. So that's next
Right?
week.
Yeah, next week.
Tomorrow I'm going to do it on the true state of the consumer. And then next week I'm going to talk about JP Morgan Silver, guys. So I'm not going to be able to get to that this week. But I promise you that will be my full topic for
The
next
JP
week.
Morgan Silver position?
Yep.
Okay.
I'm going to talk about that. But what I am also going to talk about this week are mortgages.
Yes.
Just
You guys asked
mortgages.
a lot of questions mortgage
Nothing else.
related, so we're going to
Yeah.
have one video just on that question.
And actually, we talked about kind of creating this as a separate thing where when we get a lot of questions about one topic, then we'll do something just on that one topic. I won't mix it in with anything else, and that way
You can have a reference.
Yeah, you'll have a reference. So this week it's going to be on mortgages.
So subscribe to the YouTube channel.
If you like this, give us a thumbs up. And, we're here for you. Our mission is really to help you get through this reset and, dare I say it, in a much better shape than you were as we entered it. Because shields are made of metal, not paper. So please be safe out there. We'll see you tomorrow. Bye-bye.